Hello, everyone. Thanks for joining and welcome back to Wall Street Bullion. Our guest today is my good friend, Clive Thompson. Clive has had over 47 years in career in trust and wealth management and Swiss private banking. Clive, welcome back.
Thank you very much, Ivan, for having me on your show. Good morning to you. It's very early, I think, for you, and quite late in the afternoon for me. I'm in Switzerland. And where are you, Ivan?
I'm in Alberta, in Canada.
Right. Oh, well, we'll talk about Canada in a minute. I've got something to tell you about that.
Okay, awesome. No, thank you so much for coming down. And I wanted to get you down and talk about all the excitement that's happening in gold and silver right now. First, let's start off with gold, new all-time highs. What are your thoughts for gold in 2025?
Well, up until now, there's been no participation by the man in the street. The mom and pop are not buying gold. How do I know that? There's two reasons. The first reason is the premiums on gold coins. When you sell them back to the shop, you normally get a little bit of a premium. When you buy them, you pay a bit more premium. Those premiums have completely vanished everywhere. So the shops have got more gold coming in than going out. So mom and pop, the small guy, is not buying, or he's selling more than he's buying. And the second reason I know that is when you look at the gold ETFs, they're all on the World Gold Council website. I've looked at all of them in the entire world. Collectively, the amount of gold held by the gold ETFs globally is dropping. It's been dropping since about 2020. So we've had a steady rise or a large rise in the gold price, but no participation by the public at large. Because what I would expect or would have expected is that as the gold price rises, people jump on board and start buying gold. But that's not been happening. The amount of gold in the exchange traded funds has gone down over the last 4 or 5 years. It's crept up a little bit in the last month or two, but broadly speaking, the direction of travel is down. So if the man in the street is not participating in the gold price, but the gold price is rising, who is?
Right.
Now, we're seeing on COMEX record deliveries. And when I say record deliveries, we're talking about more than 3 times the normal amount of contracts of gold being delivered. And now these contracts each are for 100 ounces of gold. That's more than $250,000 of gold. So whoever's taking delivery of that, and it's a huge amount being where the delivery is being taken, is not mom and pop. These are big players. So the big players are taking physical delivery of 100-gram bars. They're not buying coins in the coin shop, whilst at the same time, the man in the street is selling his small coins, his small bars. So we have a difference between those in the know, those with a lot of money, or somebody in the know who doesn't actually care what the price is. He's buying at an all-time high, and he's buying big, and he's buying big bars. And we're seeing this massive demand coming out of New York for physical gold. When I say physical, large, I'm talking about large bars as opposed to physical gold in terms of coins. So it's just a question of time, in my view, before the man in the street stops doing what he's been doing for the last 15 years, which is chasing after the Nvidias, Microsofts, Apples, Teslas of this world, and says, what's the next horse to back? But they're not, the man in the street's not doing that at the moment. His Robinhood account is going for the Mag 7. It's not going for the gold ETFs at all yet. Obviously, he's going for Bitcoin too. But at some point, that will change.
Right.
And we will have the man in the street participating in the gold market. But at the moment, someone in the know is buying a lot of gold.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used. Is just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use. So instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
Do you think it's central banks?
Well, if it was China, I would say, why aren't they just buying through London? They don't need to have that gold shipped from London to New York and buy it in New York. I mean, they could. I mean, they could have been secretly through sub accounts and offshore companies buying the COMEX futures, and now they're coming to maturity. They're taking delivery. That is possible. They could be operating through multiple banks. There's nothing illegal about that, but obviously they wouldn't really want to show their hand. But on the other hand, we have the bullion fix daily in London, and you can buy and sell an awful lot of gold there without. And it's probably even more secret than disclosing your hand to the CFTC in America. So I don't think it's China. I mean, there's a lot of speculation that the U.S. Treasury is acquiring gold. And we all know the reasons. There's allegations that perhaps that gold, which is in the vaults, has been leased out, or maybe it's not 100% pure.
Right.
And they're about to have an audit, and they're going to discover that some of those bars are less than 100% pure. In fact, I can tell you, I happen to know that some of those bars are less than 50% pure.
How do you know this?
It's documented by an audit they did, it must have been about 20 years ago. I can send you the link so you can find
nice.
that. But
Okay, interesting.
So it wasn't pure then. Now, that doesn't mean to say they don't have the right weight of gold, but obviously it might set hairs running if they got bars which really should be refined into 99.99% pure.
Yeah.
But I'll send you the link through so you can see that, and then you can put it in the show notes for those who questioned it. So it could be the treasury. I don't think they could get away with that without everybody knowing. Another person who's been speculated about potentially being a buyer is Berkshire Hathaway.
Oh, interesting.
Now they have the money, and back in the 1980s, I think it was, they bought a lot of silver, 20% of the world's silver at the time. They disclosed it. It was fully disclosed. If you go to the annual report way back when, you can find that they disclosed it. It's only disclosed once. They say we bought this. We're long-term holders. We don't normally disclose when we do things in investments like this, but we think there's an opportunity for profit, and that's why we're in it. And then there's no further report about when they sold it. They may well have sold it and probably did afterwards. But even though Warren Buffett is well known to not like anything other than companies which generate a profit, it's not without precedent that they've got into precious metals. They did. Now, is it possible that they've got into precious metals once again this year? Well, if you read the shareholders' letter, which came out on Sunday,
Okay.
he doesn't mention the word gold anywhere, but he does say something along the lines of the USA has come very close to the brink with regard to its level of debt, and it does not make sense to invest in bonds at the moment.
Really? No way.
So there's a sort of sense that he's perhaps setting up a justification for perhaps not holding treasuries either. Of course, he hasn't said it's not worth investing in treasuries. He said not worth investing in bonds. But, maybe he's starting to think maybe I should have a bit more diversification, just holding government paper.
Yeah,
Who knows?
because if the US dollar collapses, or if there's any type of devaluation that goes on and the debt levels get too high, only thing is gold that will protect his cash flow or his cash, correct?
Correct. So, I mean, I think the long and short is there is a big player, or there are big players in the market. These are the sort of people who know what they're doing. They are buying gold, and they do not care what the price is because they've been buying it at all-time highs. We also know, factually, that China has bought it in November, in December, and in January. And they also were buying it earlier last year. So they don't care. The last price they paid, which was the figures reported for the month of January, again, that was an all-time record price. So China doesn't care what price it pays. It seems there's other players in the market who don't care what price they pay. They just want more gold.
Right.
It's your guess as good as mine who those players are or who it is. But the small guy in the street is very happily selling his gold to them, and I think that's a big mistake.
Hello, my fellow silver and gold stacker. I just wanted to say thank you so much for watching the channel. Subscribe, please like the video, and also hit the notification bell. Keep stacking. Yeah, I think it's a massive mistake. What about silver, Clive? What are you seeing in the silver market?
Well, we've got unusually high levels of delivery in the silver market as well, but it's not as extreme as the gold market. So the delivery notices for the month of February in COMEX are well above the norm. They're at record levels, but not quite as extreme. It's something. The thing is, the February month for silver is not a major delivery month, so it's hard to draw a conclusion.
Right.
I think we can only draw a conclusion in a major delivery month. So for gold, February is one of the major delivery months. For gold, it runs alternatively. It's February, April, June, August, October, December.
And what about silver? When are the major delivery months?
I don't have them on my head, but it doesn't run as evenly as gold.
Oh,
And
okay.
there's one period. So whilst gold is every 2 months, there's at least one period in silver where it's a 3 month period, and the rest I think are 2 months. But that's one of the reasons why February is missed out as a major month.
Okay.
So
Now, Clive, I'd really love for people to connect with you. Everyone watching, I highly recommend you. Please go connect with Clive. Where can people find you? And I'll put your links in the description below.
sure, I'm on LinkedIn, and that's the best way to get in touch with me. I'm quite happy to answer any financial questions along the lines of, where do I find an ETF to buy gold, or I've just inherited some money from my mother. What do I do? Those sort of questions. Um, I'm not there for day-to-day conversations of, "Hi, Clive, how are you?" That doesn't really work for me very well.
No, you know what? Everyone watching, everyone, if you're looking for any type of advice or even the charts that Clive posts is incredible. Highly recommend you go follow him on LinkedIn. And Clive, it's such a huge pleasure having you come down. And as the market develops, as everything that happens in gold, I'd love to have you back on.
Thank you, Ivan, and thank you very much for having me. And thumbs up for all your viewers.
Oh, thank you so much. Talk to you soon, Clive.
Cheers now. Bye bye.